And welcome to the VSA Capital Tech and Transitional Energy Podcast. It's actually Friday, the 14th of October. I apologise. We didn't quite get around to recording it yesterday. I was on a course. Yes, okay, it was a golf course. But I was playing with a client, and it was a great round of golf. And Phil, I think were you at the dentist?
Yes, I was, Andrew. Always a pleasure. But I thought to myself, do you know, if I get my mouth numbed, which I did, I won't be able to talk very well. So therefore, we didn't do the podcast. Anyway,
so we're doing it on a Friday. Another crazy week we've all had. I think investors are just so fed up with this market. It's so difficult. And then we've got more. I think we've got more U-turns coming from the government. We've had so many bloody U-turns. We're basically on a roundabout, and no one knows which direction to go in. We're just going round and round and round. The pound goes up, the pound goes down. Actually, throughout all of this, it's really just dollar strength. I note that the headlines today are the Japanese yen has hit a 37-year low against the dollar. This is not a pound problem, it's a dollar problem. But markets are still very, very tough. But we're going to try and help you through them a little bit, maybe. And actually, I might just start with a little bit of a plug for an Aquis Showcase event we're holding on Tuesday, November the 29th. Now, I know a lot of people think that Aquis is still a very difficult market. The reality is there's some really good companies coming onto it. And at this event, there will be some tech and transitional energy and brands as well, companies. Bring a bag with you, by the way. There could be some quite good goodies to take away, I suspect. We'll also be giving you nice free lunch and wine and beer and drinks after. It's a hell of a good event. So watch out for that. If you haven't seen an invite anywhere, then get in touch with us, because it's well worth going if you're a high net worth investor. You've only got 100 places, limited places. Get one, book early now to avoid disappointment, as they say. You'll be going along, won't you, Phil?
I most certainly will. Yeah, absolutely. There to support client companies and investors. Yes, I will be on hand.
Good. Well, I can tell you, actually, we're going to start talking first off with one of the companies that will be there, because they're actually dual listed on AIM and on Aquis. So they're coming across. The CEO is in California. He's going to come across to this event. So if you want to nab the CEO, this is your chance. Turn up on November the 29th. And that, of course, is Invinity Energy Systems, and it's Larry Zulch. And, of course, this week from Invinity, we had a very important RNS and announcement. And probably both of us could talk to this, but I mean, Phil, you're the analyst, so why don't you talk about, in particular, the Californian energy order?
Yeah, this is so it's Invinity's flow battery tech client of ours, and the California Energy Commission, who's really are at the heart of sort of government direction in California on energy storage for the grid, have said that they would like Invinity to take part in a hybrid battery project, and that they will be awarded 10 megawatt hour system order. Now, obviously commercial terms and sales are to be agreed. But this is this is a very big order for the business, and it's one of the largest that they've had, and it's at the heart of the biggest market in the world for energy storage. So it is exciting for the company, and it's good that they've won it.
Yeah, I mean, it'll be the biggest so far, twice the size of Oxford, but California Energy Commission, California is so important that the partner in here is EOS with their different technology. I think it's fair to say, as an analyst, you've been asking me, Andrew, can you help me out with my numbers a little bit? Because it looks as though somebody is, should we say, selling their product below cost price. I think it's fair to say that is EOS, who really haven't got a product in the market yet, and therefore are basically buying into this project and effectively subsidizing Invinity, because they are not discounting. But it's great news. Will EOS be able to deliver on their side? It's an interesting question, because EOS is still really in the science lab. It'll be interesting, but certainly Invinity will too. But obviously we had some other orders out of Invinity as well this week, didn't we? We had Equans, and they've obviously just recently announced Kinetic. So the orders are piling through. And in the RNS, they did talk quite a lot, didn't they, about the pipeline, sales backlog conversion. They talked about an update on Siemens Gamesa, where obviously we're hoping to get a commercial release date next year. And they talked about financials, actually just sort of saying that actually their financials are probably a little bit better than the market thinks. And they did talk about corporate and strategic. There was actually an awful lot in that RNS. It's worth reading all of it. There are, I would suggest, some hidden messages within it. And I think this is doing a U-turn off the bottom, the hockey stick, as they call it. Some people may say the down bit of the hockey stick was a little bit longer than one would have anticipated. But I would suggest they have really turned the corner now. This is very exciting news.
It is, yeah, we fully covered it in our research. So investors that are registered with us can easily access that.
Oh, there you go. All right. So yeah, that was certainly the big sort of story this week for me. I don't know what you wanted to move on to, Phil.
Well, as ever in these ever-changing markets are very volatile. We're trying to track what companies are actually seeing, and what they're saying and where they're seeing spend. So I'll just rattle through. There hasn't been, to be honest, not a lot of announcement this week because other companies had their kind of interims out earlier, a couple of weeks ago. But the few that caught my eye were Kinetic Group, and that's in defence tech. And in fact, one of the last remaining or few defence companies that we've got listed. QQ is a ticker. It's 2 billion market cap. They had a trading update. And Kinetic design. They design and they test defence systems, targeting systems, central control, ship control systems, all sorts of weapons control, lasers, robotics, etc. So very, very high tech defence business. They had a trading update and they were saying that, not surprisingly, they're seeing very strong performance. This is in their second quarter to the end of September. Good robust order intake, and they had orders about 800 million, 18% higher in the first half of 22. $32 million 3-year contract for the MOD for air systems, and good contract in the US, $49 billion for US Army imaging. So there we go. So that's Kinetic. One that's in a completely different sector altogether, but kind of gets us onto transitional energy tech related, is Thorpe Lighting. I think we might have mentioned this one before, Andrew. I think David and I did on a podcast. This company, I was looking at the history of it. It's a classic UK company. Thorpe, Thorpe family originally founding it. Shareholders founded in 1931, but ticker is TFW, 450 million market cap. The shares in this company are only down 10%, so it's more than outperformed the tech sector. What it does is this is professional lighting, particularly things like LED technology. And very sort of the moment in the fact that there's a lot of energy saving solutions in this, but they were reporting. I think this was it was year ended 30th of June results, and their sales were up by 21.9%, and of that 9.9% was from an acquisition. German acquisition of LED technology there, lighting tech. So good organic growth in this one. 144 million pounds of sales translated into pre-tax profit of 24 million, up from 18.6. So good healthy margins. They increased their divvy as well. So that's Thorpe Lighting. So
yeah, it's known as FW Thorpe, I think, isn't it? I mean, that's businesses lighting.
FW Thorpe.
That's one of these classic old family businesses. We love them actually, and they're good for IHT. My mother's got them in the AIM IHT portfolio that's getting completely battered at the moment. I haven't told her that, by the way. I might have to let her know a little bit on Saturday. I think I'm seeing her tomorrow. But yes, FW Thorpe.
Yeah, TFW is the ticker. Another company that's been long established, very rich in technology, is Oxford Instruments. OXIG is the ticker. It's a $1 billion market cap. They've got some super tech. They're primarily into kind of advanced instrumentation for scientific discovery. particularly things like for scanning electron microscopes and the sort of probes that go into those, atomic force microscopes, sort of stuff that I like actually. Etching technology for semiconductors, X-ray cameras for examining advanced materials. Anyway, so nice broad brush of tech, goes into a whole range of industries, automotive, aerospace, pharmaceuticals, semis, and of course university laboratories. So there we go. So their half year, they had an update for the half year ended September 30th. So trading update, and they said that they have made quote good progress with strong demands for product and services. And currency very much in focus. And they said on a constant currency basis that orders were ahead of revenue during the period and ahead of orders for the first half of last year. So, good underlying demand there for the business. Not particularly quantified, but obviously progress in that. And they've said that they're expecting their profits for the first 6 months to be supported by a currency tailwind, obviously favourable exchange rates. There was a however in this one. And the however is that they said that growth had been tempered still by global supply chain challenges, and also that their price rise have not yet offset inflationary pressures. So bit of caution through that, but I would say that looking ahead and taking a longer view, this company is really tied into the development of advanced technologies for the future. It's got a super brand in the market and a broad customer base, so one to look at on particular weakness, I would think.
Well, you've always quite liked it, and there's a lot of weakness around at the moment, so everywhere.
Yeah,
but when you've got a lot of weakness and everyone is negative, you're
exactly.
Probably close to the bottom, aren't you?
Well, I covered Oxford Instruments post Lehman's when it had crashed, and another like Spectris, Renishaw, all these ones that got great brands in the industrial community and R&D communities, and my word did they rally. Over time, they were really good. They were right on the bottom, and they were good calls because of that strength of brands. Brands is something that we look at very closely, and they have, they've got that. Right, so there we go.
Well, actually, it's interesting because if you look at it, it's a company again that's been around, basically as long as I've basically been in the market, which is nearly 40 years, and it sort of trundled along, actually not doing an awful lot until about 2010, when it actually started really getting interesting. It struggled a bit in the middle of the 2010s, whatever you want to call it, but yeah, it really has had a good run over, should we say, the last 5 years, and actually it hasn't come off too bad. It's only off 29% this year, which I know sounds horrific, but it's probably better than an awful lot of other tech stocks. So yeah, quality company, no question about it.
There we are, absolutely. So Quixent, and we discussed Quixent before. QXT is the ticker, 117 million market cap. They're quite unusual. They're based near Cambridge. They develop hardware for gaming machines in casinos and the software platforms that go into those. Now, I've not been to a casino for a good number of years, but I've certainly looked at this tech closely, and it's constantly changing because of the types of gaming solutions that they have. And they also have a business called Densitron, which is this is advanced screen technology for control, what they call control services and custom displays. But basically, this is not your kind of touch screen that you would get on a, smartphone or cheaper consumer electronic systems. These are very, very advanced systems that are used in control. So Quixent have said that they are, just a quick read of this. Yeah, it's a trading update for the end of the trading update for the period ending 31st of December, and that was very positive. They had interims in September where they saw the gaming and Densitron divisions, they were performing very strongly. You've got to remember that a lot of their end markets were probably shut down during COVID as well, so they saw good recovery. And if you look at their interim results, they said that their gross profits were up by 52%. Of course, that was dropping through to operating profit. But they have again come out with a very positive trading update. So for the second time in a few months.
Can I just correct you on one thing, Phil? You actually, I think right now you're coming into casino every day. It's called the stock market.
Well, if someone could develop some very clever software to help us all out at the moment, it'd be very much appreciated.
Well, some people do use software to try and trade the market. I'm not sure even that's working, but there you go.
Oh my word! Exactly. And just a final one for me is a company called Enna Aqua Technologies. The ticker is ETP. And these guys are specialists in control flow technologies for water, and particularly like heating and hot water systems. So they've got their clients are people who've got sort of oil, electric heating, sort of general hot water systems. They also are involved in heat pumps. And they reported their interims and their revenues, and I'll just look at this in more detail. Their revenues were up 92% to 24.2 million versus 12.6 million, and they said that was reflecting growth in contract wins and project completions. I'm not sure if there's an acquisition there. I'd have to check, but their sort of underlying profits increased to they were flat. So yeah, continued investment. So it looks like they have been investing in internally, probably in product development or building their markets, and it's got there's cash in there as well. But clearly, there's some good top line growth in that one.
All very positive. All the announcements. I also noticed that Ashtead Technologies, which we've talked about a little bit in the past, which rents subsea equipment, had a very positive trading statement. I think beating expectations this week. Dark Trace, which obviously has been in the news quite a lot, they had a Q1 trading update. Actually, they confirmed full year expectations. And I think Marks Electrical also just confirmed expectations, didn't they?
Yeah.
So we sort of, I mean, all three interesting companies, all three companies we've spoken a lot about in the past here, but nobody's actually out there at the moment in the tech space, or also the transitional energy space, saying, God, it's a nightmare.
No, I know. And yet you look at the share prices, and you think yeah.
And it is a nightmare.
Yes. Look, it is for investors, but it is quite key to keep looking at what the companies are saying, what they're doing, where they're investing their money. And as I say, I go back to I remember covering a number of these companies. Post Lehman's crash, the FTSE hit or was heading towards 4,000, and they just the ones that have got great customers, good strong brands, right, and their share prices got hit and really did recover. Because if you can do well in a seemingly tough market or stretched economy, if you can continue to do well, think how well you're going to do when things get going again.
Actually, talking about brands a little bit, because we do occasionally call this tech trends and brands.
Yeah, we do.
And I think it's a brand. I mean, it's a brand leisure, I know, but we are doing the dual listing, aren't we, next week of Cook's Coffee. It'll be the first ever New Zealand listed company listed on London. And actually, it's very interesting. It's well worth trying to get hold of a copy of the presentation site, which we can obviously provide, because we all think of coffee shops as, oh God, there's so many of them. There's Starbucks, there's Cafe Nero, there's Costa Coffee, and what some people haven't realised, they think, oh, there's too many coffee shops. That's what the ignorant people say. There's a big move in the trend. We're going into the second level of coffee shops, aren't we? Where the coffee shop is morphing from what I describe as just a coffee shop to more of a quasi cafe coffee shop. In fact, if you wander around the city, you see a lot of them now. There's a new trend coming in, and that's what Cook's Coffee are really good at. They're actually the fourth largest chain in the UK and Ireland, but they have this combination, don't they, where people go there for something to eat and have coffee with it. In fact, in some of them, you can even go and have a drink if you want, which is quite pleasant. The trend is changing. So it's a company well worth looking at because they've understood the change of the trend, which is always so important when you're investing.
Yeah, absolutely. And just, the name might not be known, but the brands are. So Cooks have Esquire's coffee and Triple Two are the main brands. And Andrew, yeah, you're right. And again, we produce quite detailed research on the company. Is this shift in the market towards sort of more food orientated, sort of pseudo bar orientated in the evening, and also kind of tailoring things around budgets as well, and consumer spend. So, and it's a growing area, and there was Loungers came out there listed, and they came out with a pretty positive trading update today to say, just how much the sector is growing. It is amazing how where the consumers certainly are spending on these things still. Yeah.
And maybe just to finish off, I know in the past we've commented quite a lot, or I've certainly commented quite a lot about private equity and how they've been distorting prices and the valuations in their companies to keep them going. I think it's quite interesting today that in the FT, Harvard, who are one of the biggest, they're one of the first to really get involved in private equity, and one of the biggest investors, have said private equity firms are going to have to mark down significantly the value of the companies within their portfolios because they are at the wrong level. Let's be honest, an awful lot of private equity companies aren't quite as smart as they thought they were. They were just using very cheap capital and very good at how to leverage a business. This could be the start of not the end of private equity, but a definitely changing of the winds, shall we say, which we have obviously been talking about for some time and predicting. Actually, the other one I'll finally mention, funny enough, this is just me. I've been talking a little bit to clients this week about SSE. Because it's a roller coaster, SSE. It just gets going, and the price is moving up nicely, and then bam, something comes along, seems to hit it, and every time it falls back down again. It just can't get this steady momentum, but it has come quite a long way back down. It was pretty close to £14 at one stage this week. It has bounced up actually today because the market's quite strongly, about 14.80. But I can see that one trading back up to £18 because it's basically a bit of a trading stock, I think. So you can trade it 14 to 18. Next year it'll probably be 15 to 19. The year after 16 to 20. Who knows? But it's a trading stock. It looks like a trading buy to me.
Well, that's an interesting call. Crikey. I heard a trading one for like, oddly enough, Arm used to be like that. It was trading in a range. Yeah. Yep. It's another way to look at investors. Interesting call.
Oh, there you go. We try to be interesting on this podcast, right? It's a bit of a short one because we're all a teeny weeny bit busy, and also we're not to disturb your weekend, but your Friday night listening. As usual, if you disagree with anything we've got to say, just let us know. If you agree with things, let us know. If you want us to talk about something, let us know. And on that note, have a very good weekend.
Oh, terrific. Chat next week, Andrew.